Hey guys, Tom here. I just wanted to stop and give you guys a little bit of a breakdown on what I'm starting to see as how really powerful and cool using the trust is to do owner finance wraps, and kind of starting to see a little bit of the back end of them now, and the kind of things that you can do. So I'll walk you through a little bit about the underlying numbers on this deal, and then I'd like to actually hear what your opinion is on what you would do if you were in this situation. Okay, so it's a property in Havertown, PA, not too far from me. Um, so right now I have the tenant buyer is defaulting. Okay, it's unfortunate. Sometimes it happens. That's the way it is. So it looks like we're probably going to be moving forward with the eviction here pretty soon. Um, so without getting too far into the weeds, this is what we're looking at. So I'm going to re-examine the property and see what's what here, and I'll give you guys some options that can be done, and I'd like to know your thoughts. So anyway, so I purchased this in, as you can see, August of 2022 here. So here was the first and only strictly seller finance deal I've ever done directly with the seller. So this came from a cold call campaign, and no agent involved. The property was completely paid off. So the seller gave me this note right here, as you can see, $180,000. The first payment started in October, so October 1st of 2022, because we had asked to defer the payment slightly, and he was cool with that. So $180,000. Does it have the interest rate listed here? 5%. So 5%, $180,000 over 30 years. So this is my principal and interest payment to the seller right here, $966.28. So that's the note that originated and started October 1st of 2022. So I'm going to show you guys kind of a breakdown of what that looks like. So if it originated, right, 180 grand over 30 years at 5%, we're just looking at the P&I payment here. So we're going to fast forward, look at the amortization schedule, and as you can see, we're in 2025. Got to figure we're going in April. So there's about, rough numbers here, about $173,000 owed to the seller at 5%. Okay. Now, what I did was, when I acquired this property, I found an owner finance tenant buyer. So that buyer gave me, and I'm going to go through the numbers with that real quick. He paid $250 for the house. He gave me 25 grand down. Okay, I gave him an interest rate of 9.95%. Okay, so as it stands, because of the interest rate that the tenant buyer started with about 2 years ago, right? It's all interest payment for the most part. So what's remaining is about $225,000 on that note. Okay, so the eviction holds a few different exit strategies, in my opinion. So one of the things, actually, let's look at the property first real quick, just because one of the things I'll do is I'll check again the market rent, ARV, things like that. So let's jump into the market rent. So here you go. So I pulled this screen up already. This is the area. We're going 3 bed, 1 bath, about 1,300 square feet, twin homes in this section right here. So some comps right here. So we got one on the high end at just under $2,800 a month for rent. Okay. And it looks like the rest of them are kind of floating around 2,500, 2,550, so somewhere in that range. I usually push for the higher end if I am going to wrap as an extra strategy, so potentially up to 2,800. Okay, so let's jump. I'm going to share this screen over here. Okay, we'll throw that in there. So we're going to look at the ARV real quick. Okay. So here's a super recent comp. This literally just sold and closed a few days ago. So $426,000. Okay. This is a really good comp. Twin, semi-detached, same type of front porch, driveway. Okay. Nice. nothing super crazy, right? It's a very sought after school district and location for sure. So pretty standard. Kind of looks more like a rental than it does a flip, that's for sure. If it is, or maybe it was just the homeowners or whatever, but finished basement, so that would be the only difference. So let's get rid of that screen. Okay, so 426, and there's also one over here for 443. So this one looks a little bit more done up. This is a 3.2 instead of a 3.1.5. So this one's all dialed up. So what do we got? 443 on the high end. Okay, so this is the options that I see, which are pretty cool. And this is something I actually only learned fairly recently. So because whether or not the tenant buyer comes through, I hope he comes through because I don't want to see anybody default. So he's been very late. He missed a couple months at a time, and I've worked with him and come back, and now he's behind again. So it's kind of that ethical thing that nobody really likes to deal with. I don't like to deal with it, but it's part of the game, right? So I am going to push forward through with posting notice and then moving forward the eviction, and hopefully he is able to catch up in the cure period. But if not, either way, this is kind of what we're looking at. So I am actually able to bring in a lender to do a cash out refinance on this if I want. So I'll tell you why I'm going to look at that first. It means I don't give up the asset. So we're going to get into the potential sale after this. But for example, so because the tenant buyer, let's say, stays in place, right? Either way, but if he stays in place, okay, I can still do the refi. Okay, I can bring a lender in to put a new loan on a property for $225,000. Now I owe $173,000. Okay, so the lender that I'm looking at is offering 7%, which is not terrible. As you can see, the new payment, including taxes, or new principal and interest payment is like rough numbers about $500 more a month than the current P&I payment to the seller. So the seller would get refied out and paid off. The new note or term, the principal and interest payment would be about $500 higher. Now with taxes and insurance included in there, the new payment would be about somewhere between $2,000 and $2,100. Okay, so as you can see, the market rent can be pushed up to as high as about $2,800, and that's kind of the parameters that I look at for wrap buyers as well. Potentially a little bit higher, depending on what they come in for a down payment, right? So let's say I did the refi. I'm pulling out about $50,000, right? Rough numbers. Okay, tax free. Do not get rid of the asset. Turn around and find another owner finance tenant buyer to put into place. Depending on the work done on the house, I haven't seen the inside of the house. If the eviction does go through again, depending on the amount of work in the house, I should be able to get between 25 and 40. Potentially, we'll see, on a down payment. So let's say that, hypothetically speaking, that happened. So do the refi, pull out 50,000 tax free, get let's even on the low end, $25,000 down payment from a new end wrap buyer. So that's $75,000 right there. Now, as you can see, I'm still leaving enough room based upon the new higher market rent to still make about $700-800 or more a month net. And still pull out all the cash flow, still retain that asset, and give me the ability to continue to hold it and do it potentially again later on. Okay, so that's just part of the game. So that is one extra strategy I'm looking at. So in a nutshell, pull out $50,000, get another $25,000 to $30,000 down payment. $75,000-80,000 net positive again, and I'm still going to make $700-800 a month and hold the asset, continue to depreciate the asset. Continue to have the ability to do another refi in the future, things like that. So now, obviously, the other extra strategy, you saw the comps. So we're looking at, whatever, 420 to 440, depending on the amount of work that gets done. So let's just pull up a calculator real quick, and let me see. Okay, just for shits and giggles. All right, so let's say, whatever, let's just call it 420, right? Say we have to put some work into it. I'd imagine there's probably going to be a little bit. I could be wrong. The whole outside, it still looks like it hasn't really been touched that much. It needs new siding, new roof for sure. Because I stopped by the other day. The inside, I'm not sure. I have no idea. So well, you know, we have to probably, let's just configure it in here just for the heck of it. So 420, let's say we were able to list that and sell it. So we're going to times that by 0.92 to account for closing costs and commissions. Okay. So we're at 386.4. Now, if I didn't do the refi, I owe 173 to the seller. Okay. So we're going to minus off that 173 to the seller. And let's say we even have to put 50 grand into it. You know, I don't know exactly what that number is going to look like, but we'll have to see. So let's just say we have to throw 50 grand. We got to do the roof. We got to do the siding. We got to continue to make some updates inside. Okay. $163,000. Now, what I could do with the sale of that, if I do move forward, that is 1031, because I've already talked to a 1031 guy, so we can do this through the trust and then, you know, identify other assets and play that whole fun game too, or I could just keep it and pay the taxes on it. So pretty wild, considering that I was able to get this deal with zero down and just have the buyer pay and, you know, clear all that up front, you know, with his down payment, and then make $1,000 a month I've been making when he pays, right? So there you go. I just wanted to give you guys a quick breakdown. I'd like to know what you would do, what you think about any of these strategies, and hopefully just open up some discussion on all those things. So, all right, I'll catch you guys next time. If you like this video, let me know. I'm happy to do some more here and there, and reach out if you need anything. All right.